As we come into autumn, it's time to turn our minds to tax planning. A lot of our agricultural clients have again had a good year with buoyant red meat prices and sustained good crop yields. Of course, there's been areas of difficulty with frost or adverse seasonal conditions. The pig industry's received some very adverse events with a glut of supply coming in from New Zealand. But for those with profits, we turn our minds to the various levers of tax planning. Now, superannuation for a long time has been the A-class tax planning tool in the accountant's back pocket. With $25,000 limit, we're somewhat becoming abridged in how far we can go with superannuation when you consider super guarantee needs to come out of that $25,000 as well. We turn our minds to the usual suspects of deferring income, bringing forward expenditure that we need for production, concessional rules around capital expenditure, $20,000 limit allowing an immediate write-off. There are some commentators, of which I would be one, who suggest this is a false economy, because rather than gaining a deduction over a number of years, you bring it all up front, which really kicks the can down the road, but it's a deferral rather than a true cost saving. One area that has been far from in vogue for much of the last decade but might come back into the picture is product ruling assisted agricultural investment. As retail suffers and other industries seem to disappear our shores, the possibility of growing wood comes back onto the radar for the first time in a long time. The metrics really have been sullied by the failure of Timbercorp and Great Southern. However, particularly those in the southeast of South Australia, they would see that there is a bucket load of wood being grown, and getting an upfront tax deduction for the capital cost of planting and deferring the revenue source to a time when perhaps lower income is being received from personal exertion, it for a certain portion of the client base might be worth talking about. Of course, we see again in agriculture wire and water being very popular in tax planning in increasing future production potential with modest expenditure today. Security of water remains both a very good capital investment and resilience to the production program. Strategic agronomy in determining which way to rotate your crops is not so much in my field, I must admit, but preparing paddocks for that activity is also part of the tax planning mix. So as you head into your tax planning exercise with your accountant, think about broadly, not just this year, but over a number of years, how we can spread the tax impost and help your family achieve your goals.